3 years ago, German automaker Volkswagen expected so much demand in India that it planned to launch 4 new models in the country. But since then, car sales have slowed considerably, and VW has shelved its expansion plans.
The automotive industry is facing an unprecedented slowdown. The vehicle sales in all segments have continued to plummet for the last several months. The 15 to 20% drop in vehicle production has led to a crisis in the auto component sector.
It's also led to massive job losses. Car makers have cut 350,000 jobs since April, while another 15,000 people have been laid off by firms that make motorcycles. That's had a knock-on effect on companies that produce auto components, which have fired 100,000 people. Industry representatives say there are more job cuts ahead and that as many as 1 million people could be affected. Other businesses are also hurting. Falling incomes have led to protests by farmers and real estate development has slowed. The central bank's cut its growth forecast for this year from 7% to 6.9%, and it's cutting interest rates to boost the economy.
In today's meeting, the MPC judged that with inflation projected to remain within target, addressing growth concerns by boosting aggregate demand, especially private investment, assumes the highest priority at this juncture. In addition, it has changed the stance of policy from neutral to accommodative, which is effectively a further reduction in the policy rate.
But the cost of borrowing isn't the only concern for businesses. Rising unemployment and static incomes are forcing consumers to cut back purchases. Higher taxes and stricter enforcement have dried up investments in some sectors, and slowing global growth is restricting exports. New Delhi is reportedly considering tax cuts and government support to spur growth, steps many analysts say are unavoidable to keep the economy growing. Mobin Nasir, TRT World.
Well, let's get more on this now with Sunil Poshakwale in Birmingham. He's an international finance professor at the Cranfield School of Management. Welcome back to the program, Sunil. Now, interest rates in India are at a near-decade low after the 4th rate cut this year. Are these interest rate cuts working to boost the Indian economy?
Well, one would hope so. I think two things are crucial here. First is that it will depend upon how quick and efficient the monetary transmission is in terms of banks passing on this interest rate cut to the borrowers. So far, the evidence suggests that since the beginning of the year, the weighted average lending transmission by the banks to the borrowers has been about 30 basis points as compared to 110 basis point interest rate cut that the Reserve Bank of India has embarked on with the concerns, of course, of slowing down of the growth. So that is one. Secondly is, as your report suggests, that the government will have to think about fiscal stimulus as well. And in that regard, the government already has plans. In their budget. They did propose huge infrastructure spending. And so government will have to kickstart the economy by actually spending money for that. And for that, they will need to attract investments. There has been some good news. A couple of big pension funds, one from Australia, another from Canada, have committed to invest $500 million in the infrastructure fund that the government set up in 2016, which has about $1.8 billion worth of funds to invest. So yeah, a couple of things required, not only the monetary policy stimulus, but also fiscal stimulus is required.
Now, India is also now a target of US President Donald Trump's global trade war after he effectively hit $6 billion worth of Indian goods with tariffs back in June. Now, that's not going to help India's growth outlook, is it?
No, it's not. And trade war in general is having a very negative effect, sentiment on the global economic growth, as we know already. Not only India, but as your report suggested, many countries in Southeast Asia, Australasia have embarked on interest rate cuts, and they are experiencing similar challenges. Well, may not be directly in terms of tariff from US, but certainly the export-oriented economies like China and India are at the rough end of the Trump's policies about it. India has to think in terms of growing its trade with other countries, including China and Southeast Asian countries, as alternative destinations for their products. The other concern, of course, for India is that the growth in the business process outsourcing, which is one of the largest kind of source for employment to young Indian engineers, has also been slowing down. So there are very tough challenges ahead.
Now, as we know, India is not alone in trying to address these growth concerns. We've got central banks around the world cutting interest rates in the hope of boosting inflation and growth. But what do you think is the main reason behind this global slump? Is it Donald Trump's trade wars?
Well, I mean, the biggest issue has been that the China, which is really the driver of economic growth, the slowdown really began from there, and the Chinese economy had historically relied on huge infrastructure spending, and since that has slowed down, the Chinese economy hasn't been growing. The other problem for China, of course, is the ongoing tariff war, which is not helping the Chinese exports at all. And of course, more recently, there has been tensions about the currency manipulation accusations that U.S. has laid down on China, accusing it to manipulating currency because it has further devalued its yuan against the dollar to go over 7 to a U.S. dollar. So there has been those problems there, and overall, I think globally, all countries are experiencing this economic growth slowdown, and it is a matter of concern to all economies, including India, of course.
Sure is. Okay, Sunil Poshakwale, we'll have to leave it there, but thank you again for your time on Money Talks.